afternoon, good evening, good morning. Depends on where you're joining us on this big blue marble. Let's go ahead and get airborne. This is the final free live trade brief here at Full Throttle Week, man, and we are closing the doors. What an epic week. We'll do a quick 5-10 minute debrief, then I'll introduce our guest host, our presenter, who's going to talk to us about kind of trading through an LLC or setting up a business and answering all the questions that I simply cannot answer. I do not play a tax attorney, accountant, or CPA on TV, and I definitely defer to smarter people than me. Personal account, long Amazon, not on that screen anymore. Short Amazon. So I dumped my short 250 shares of Amazon at the open today and made about $42,000. Whew. That was a lucky strike moment, man. So long Amazon with my calls that are just sitting there still, and I have a Robin Hood covered call that we're knocking out. We did it, folks. Welcome aboard Monday night, Tuesday morning, primary brief. Tuesday night, we gave a training demo. We did our accelerated retirement brief yesterday, and now we're kind of doing our traders accounting brief. Rick, you had a great week. I did have a great week, man, and I'm really, really happy about that. Well, men lie, numbers don't. So we'll look at the numbers here in a second. But quick reminder, we're getting done. I think before I jumped on, there's like 11 slots remaining in Full Throttle here. All right. I literally just got off the presentation with Bart. We're going to be launching Tomcat Charts in a couple weeks, February 18th. We're going to open up the doors to Tomcat Charts. You can always join Solo Amazon, but we're here right now, Full Throttle, with close to single-digit memberships available, maybe 11 or 10 or whatever it is right now. We're going to be full because I know support's got some emails about people working some deals or whatever. Susie's like, I have to upload some people. I guess people don't like order forms. Anyway, grab your slot right now. And the best deal, obviously, is to get Full Throttle, but also get the Hunters. The Hunters is packed right now with all the new members, and there's a ton of activity going on in there and chatting and trades, and I love it. I could not be happier. Hunters is that active and going on right now. We have some really good stuff going on here at TGO, folks. 7. I put 7. Oh, it was 11 this morning. 7 annual memberships are left, guys. So we're going to close the doors when we hit 50. You guys know we're a tight-knit squadron here. I don't want 1,000 people because that just means I'm a bad instructor because I can't sit here and answer everybody's questions. I don't like it. So we keep it tight, Full Throttle once a quarter, and then we close the doors and get airborne with our 50. So you need to drive the fight. I don't do free trials. You just got your free trial. You just got 4 live trade briefs with me. If you can't get off the fence, I ain't going to push you, man. So how do we do this week? Speaking of Rick saying you had a great week, well, I did have a great week. Here's there's Amazon trade for today, $41,000. that made me feel better. And then in our training account, month to date, well, it's February 3rd. Wiz, how'd you do in the past 3 days? That's 12,700. The SPX bearish trades we covered, baby, are looking pretty good. The short volatility trades, and then yesterday I threw on, as Google popped the other day, I threw on a bear call spread on Google that's currently $1,600. So by tomorrow, if everything's looking pretty good, this will probably about $15,000 this week on limited risk. Okay, this is my notional model portfolio, right? It was $100,000 portfolio, and I only risk no more than 5% on any one trade. That's my SOP. That's my standard operating procedure. Why? Because if I blow up $5,000, it hurts, but it's not deadly. All right. So you have to trade with your SOP. But every one of these trades this week were on limited risk. Even if you didn't do the exact trades I did, and you just kind of did a couple contracts, you take a 0 off of this. If you just did a fraction of what I did, or if you doubled what I did, you're looking even better. So I love this because I got in here and showed you. I don't give you 122 PowerPoint slides and say, hey, buy this. I open up the door. You walk around all week, kicking the tires of the airplanes and checking it out. So I'm really happy with this week. And it was an ugly week. Well, ugly's in the eye of the beholder, right? I mean, my wife married me. And I think I'm pretty damn ugly. But I mean, look at this, man. I told you this was going to happen. Absolutely nailed it. Oversold, overbought. We're coming back. I told you we're coming back down to this 200-day moving average. And we haven't even gotten started yet for the February shit show that I think is going to happen out here. We have our trudges on. We did our trudge this week with the SPX and I think we got Lookout Below coming. So that's how we did this week. Quick reminder, this is what you get with Full Throttle. Primary brief 10 on Tuesdays, the weekly options at Wednesday at 10. But reminder, the weekly options brief is Wednesday at 10, but I'll send out the weekly trade like Monday or Tuesday. We just kind of talk about it on Wednesday. I mean, hell, I might send out the trade on a Friday. It's just whenever I see it. And then we do our AR, our accelerated retirement brief every Thursdays at 10. Just a quick reminder, this is Full Throttle. Solo Amazon and Tomcat charts are not part of Full Throttle. I think we're starting our training Monday and Tuesday night. I need to double check that my Panthers hockey games do conflict, and then I'll send out the schedule. Remember, if you don't know what the hell an option is, welcome aboard, because that's session 1. And then we take a building block approach, just like I took at Navy Flight School, man. This is an airplane. This is wing. These are wings. That's the weather. And then a year later, you're a steely-eyed fighter pilot flying off the pointy end of craft carrier. So building block approach here at Top Gun Options, 7 o'clock at night after market's closed, hanging out, feet up. We're going to talk options until you get it. You get your manuals. Download those now as soon as you become a member. Download them, start reading them, man. Curl up on the couch, go to the beach. Here in Florida, I'll go to the beach, or go to the ski mountain in the lodge and sit there and get your mind right. Make sure, I covered this yesterday, once you become a Full Throttle member, go watch the previous Full Throttle sessions, the last 8 we did from last quarter. Because an iron condor is an iron condor 20 years ago, 20 years from now. But the tactics are different, the employment of it, because there's different stuff going on in the market. That's why I'm one of the only guys out here that does fresh training every year. There are people out here who charge you $5,000 for a videotape of them in front of a whiteboard talking about an iron condor 20 years ago. Not me. And then we talked about performance, and I just told you how we did this week. So there you go, guys. Get airborne now before we shut the doors. Yeah, you can sign up for Solo Amazon right now, but here's where you need to go. If you want just Full Throttle, everything I talked about is $295. If you want the Hunter and access to all my trades live and your Squadron Mates trades live, it's only $497. It was $794. Coming back from San Diego on my journey, I'm like, you know what? Here's what I'm going to do. So you get a 37% discount, or what almost all of the new people have done is the Full Throttle annual. You're getting a 50% discount, $6,000 discount, because I'm throwing the Hunters in there. You're welcome. All the people who were in the Hunters they're like, holy shit, dude, thank you for this. I'm like, you're welcome. Because I feel just like the COVID crash, Joe Biden's sophomore year is going to it's going to get even worse, guys. It hasn't even started yet. We're just in the second month, man. So yes, I'll give you the link. Solo Amazon is right. Sorry, I'm using my AirPods if the audio sucks, man. I'm trying to be cool. But here's the link for Solo Amazon if you just want to join that. If you know what, I still want to see if you're an idiot or not. $97 for 30 days. If you saw what I did this week, making 13 grand in front of you, and you're like, I'd like to maybe learn how to do that, here's the link for that. Okay, and again, I apologize for my audio, but I thought I'd look cool with my AirPods or whatever the hell it's called. All right, here we go, man. I love partnering with guys like Jerry. I love partnering with people who are a hell of a lot smarter than me with 500-pound heads. As long as I've been trading for 3 decades. Jerry's been a CPA, practicing accounting. Right. He's got a doctorate in BA. He's got a master's in math, which makes my political degree look like I'm a caveman. So he's been in accounting for all types of businesses. He's taught at several universities and colleges, and he helps his students set up and operate their businesses efficiently. So he's also published a bunch of journals and conference papers. But like I said, I give way to you, Jerry. Why don't you take the controls, dude? And I am all ears. I got a notepad, and I'm gonna pay attention, my friend.
All right, very good. I'm going to take over. I appreciate it, Rick, and hope all of you are having a great day and a great conference here. And what I'm going to do is I'm going to share my screen, because I've got a PowerPoint presentation. And so I'm going to bring that up here. And Rick, can you see the PowerPoint right now?
Yeah, you got it. Yeah, I see it.
Okay,
Trader stack status. You got it.
All right, fantastic. I want to make sure everything's going right. All right. Once again, my name is Jerry Allison, and I am a CPA with Traders Accounting. And what we're going to talk about today is trader tax status versus investor status. Now, we're going to be covering a lot of information here. And of course, this is appropriate right now because this is tax time. Everybody's starting to think about their taxes. January 31st has gone by. You should be getting W-2s and 1099s and all that stuff in the mail right now. So that we're starting to think about tax for us. And so it's an important thing right now that's on everybody's mind. So we're going to talk about a couple things, information out on the internet, and not all of it is accurate. Please be careful what you read out on the internet, because there's a lot of things that just don't jive. So what we're going to be doing here is we'll be, first of all, be giving the presentation, and then at the end we'll take a few questions. We'll have a Q&A and answer some questions you might have, given the amount of time Rick has, and then we'll let you go. Now, the presentation here is actually broken up into 3 parts. So we're going to be talking about trader tax status and what that is and what it means for you. And then after that, we'll be talking about business structures, because it's a natural lead-in for business structures to talk about those. And then, of course, we'll be talking about the mark-to-market election. And for those of you who always thought trader tax status and mark-to-market election were the same thing, they are not. They are somewhat related, but let's go ahead and get going into the presentation. The first thing I need to do is I've got to go over our disclaimer, and to the best of our knowledge, the information given in this webinar is accurate as to the date of the webinar. Tax changes happen constantly. Matter of fact, we've had some changes. Coming into this year, the IRS has changed a few ways that the elections are made. And so prior to using any information in this webinar, you should really consult a tax professional, because things are changing constantly, and it doesn't necessarily require Congress's passing of a bill to change tax code. The tax commissioner has the ability to change a few things, and so that's where we run into some issues where things change. The seminar does not establish a professional relationship between you, myself, and Traders Accounting. And finally, Traders Accounting is not a law firm, so advice provided here should not be construed as legal advice. Now, a little bit before we get going here, we do have a web link here. I believe Rick's got that, and he'll be posting that in the chat. And so if you want to get a hold of us, feel free to go to the website and sign up for a free consultation. And I'll address that here at the end of the presentation. And our phone number is 1-800-938-9513. And we do have people standing by, as they say. We have a wonderful receptionist whose name's Crystal. She would direct your call to wherever you need to get to go, and we'll be happy to help you out. And certainly our email is at learn@tradersaccounting.com. Well, as Rick mentioned, I used to teach in a university environment, and I used to teach graduate students as well as non-graduates. And in a class, I would ask them, what is the most important thing in a business? And of course, I'd get all kinds of answers. And this is going to be an unusual presentation because I'm going to come at this from a little bit different standpoint. But I get all kinds of answers to this. And some people would say sales are important. You've got to sell things. Well, that's important, but it's not the #1 important thing. Then I get an answer like customers. Customers are important. You got to have customers. Well, no, customers actually aren't very important. Well, they are important, but for some businesses, they're irrelevant. Great employees are important. Well, those are important if you need employees, but a lot of businesses don't have employees. And I'd get other answers like good reputation and things like that. And you as traders, having a business trading, and I define business very loosely as earning money, basically. You don't have a lot of these. Matter of fact, you don't have sales. I mean, you sell the stock, but you're not selling a commodity, or you're not selling an item on the open in the commercial world. You don't have customers. You don't have employees. You're doing all this by yourself to earn money. But every business has one thing in common, And one thing that's very important for that business is this: it's cash flow. Cash flow is extremely important. You need cash coming in because cash pays the expenses. You need cash coming in to live off of, but you also need to keep cash from going out as well. And I've seen businesses with very high cash flow, but they also have high cash outgo. And so it's leaking as much cash as it's bringing in. And so you've got to watch your cash flow. And if you take a mind here of trading, but really anything in life, you monitor your cash flow, keep it coming in, maximize the flow coming in, and minimize the flow going out, you can do extremely well. Now, regardless of a business, if coming in, the business will starve to death. You can think about businesses that have do a lot of credit, farm implements and companies that deal with credit. They can deal with credit and their financial statements look great. They have high sales, but if they don't collect on those credit sales, if they don't get that money coming in, that company's done for. And like you, if you don't have trading income coming in, and if you don't protect your outflow of cash, your business is done for. And so you guys are actually learning the one side, bringing cash in, how to get cash in. But this presentation basically is going to be looking at how to keep cash going out. And that's another side that we need to protect, because if it's going out faster than it's coming in, regardless of what you make, your trading business is doomed. So the points in the web are to either generate cash flow or to protect cash flow. Generally here, we're going to be talking about protecting cash flow. So you guys are the experts at trading, or should be the experts eventually, and you can generate cash flow. However, we need to protect the cash flow from going out. And that's where we want to look at the tax side of things to keep our tax money, or our money, from going out in taxes. We want to protect it from maybe in an insurance perspective. And we'll be talking about a lot of strategies here in order to keep money in their business and not leak out. All right, the first thing we want to look at is trader tax status. Now, trader tax status is simply, it allows a trader, an indicator, to deduct trading expenses from a tax return as a business. Now, this is for people who are individual investors. They're reporting their income on their personal tax return, and they are reporting expenses as well. This allows you to deduct expenses on your personal tax return. And a lot of clients come to me, particularly this time of year, what can I do to offset my large gains? Or at this time of year, in fact, I've had several clients come to me already say, hey, I had a big year last year. What can I do to reduce the tax load for last year? Well, for 2021, things are pretty much done. I mean, we can't do a whole lot. However, this is one area that we can look at for help. And so when people come to me after the fact, instead of planning for it before the fact, after the fact, we go to trader tax status and see if there's something that we can do. And why is this important? Why is it important to deduct trading expenses on a return? Well, let's look at an example. Suppose a trader with trader tax status deducts a $5,000 training course. We're just making some numbers up. If the trader is in 2% tax bracket, the trader just increased their cash flow by $1,600 over a trader without TTS. Now you say, wait a minute. We're losing $5,000. How is that a net increase in cash flow? Well, you're going to pay for the trading course either way. So you're going to spend $5,000. Why not $1,600 back to either save on just your expenses or to put back into investing? I mean, $1,600 to some people it's chump change. Some people it's not. Some people can take that money, that $1,600, and invest that savings and make a tremendous amount on it. And so we are increasing cash flow by that $1,600 in this case. So the idea here is to be able to take your expenses, deduct those on your tax return so that you can save the tax money and then put that back into investing, be able to save and put that back somewhere else where you actually need it. Now, this brings up all kinds of questions here. Obviously, in this seminar, you've paid for all this training this week. That is a tax deduction, or could be a tax deduction. And so you can actually save on that a little bit. However, we don't want to fall into a trap here. And by the way, everybody does not qualify for trader tax status. And I'll talk about the qualifications here in a little bit, but you might want to consider it for last year if you were trading last year. We don't want to fall into a trap here, and here's the trap. It's unwise to spend money just to get a tax deduction. It's all in decreasing cash flow. Now, in the above example, you're going to spend, this person spends $5,000 for a training course. The idea in that training course is that the education that comes with it is going to pay itself back. You're going to earn that money back by how well you trade. That's the goal. And so not only are you spending this money for the training class, but you're learning something that you can earn that money back. You just don't want to go out and spend money for a tax deduction though. I had a client go, and he was an automotive repairman, and he came up to me about tax time right before the end of the year, and he said, I want to buy this piece of machinery so I can get a tax deduction. And I said, okay, tell me about it. He said, well, it's going to cost $20,000. And so, but I want to write off, I want to save some money on my taxes. I said, okay, you're going to spend $20,000. And I figured that would save you about $6,000. I said, how often are you going to use that piece of machinery? He said, well, maybe once or twice a year. And I said, okay, you're going to use this machinery once or twice a year for the next however many years. How long is it going to take you to pay for that? Sure, you're spending $20,000 and you're getting $6,000 back on your tax return, but you still have a net outlay of $14,000, and that's not going to pay for itself anytime soon. So keep in mind that when you run your trading business, don't make expenses just so you can deduct have a deduction. It's going to actually turn out badly for you. When you make an expense, when you spend money for your business, make sure it's something that helps you trade better. In the long run, it should pay for itself many times over. Okay. So that's what trader tax status is. It's basically being able to deduct your expenses on your personal tax return as a business. Well, who qualifies for that? Well, that's the next thing we want to look at. Now, the IRS is not known for communicating very well. And so the qualifications for trader tax status are actually an IRS publication 550. And so I'm going to go through these really quickly, and you're going to find out what I mean. They don't about not communicating very well. Daily market movements in the prices of securities or commodities, and not from dividends, interest, or capital appreciation. Okay, so basically that means you're going to be like a day trader. Swing traders also work in this, but you're not going. You're not holding securities for dividends or interest. And you're not doing capital growth. You're not letting something sit there like a long-term investment and grow. So you're rapidly trading. Okay, yeah, most people get that. That's not a problem. Your activity must be substantial. What does that mean? Well, it basically means it must be enough for them to think it's enough. It's ridiculous how this stuff is worded, but this is how it's worded in the IRS language. And then last, you must carry on the activity with continuity and regularity. Well, what does that mean? Well, it means continuous. It has to be ongoing. Regular. Well, what does regular mean? Regular to me could be once a day. It could be once a week. It could be once a month, or shoot, once a year. If you do it on the same date, it's regular. So this is the ambiguity occurs in the IRS language, unfortunately. So what we have to do, because these qualifications are extremely vague, we have to look forward into court cases and to get a feel for the qualifications, because what happens is investors like you, the IRS comes in with these vague regulations and tries to enforce them, and people sue. And so when they go to tax court, they sue. And so what we find out from court cases is that we have certain qualifications where people actually won those cases based on this. So let's look at three major court cases here that actually define trader tax status. And so these are the ones that I generally point to the clients, say, okay, do you do this, this, and this? So the first one, Endicott versus Commissioner. This is where the IRS lost, because Endicott was an investor and he had investments that he held less than 31 days. So it was a very rapid turnaround. And so one of the qualifications here for trader tax status is most of your trading is short term. Now, short term here is defined as 31 days or less. So, that qualifies if you hold something for a week or two, waiting for your positions. Your swing trader, day traders definitely would apply. It would apply here, but certainly anything for the short term. Now, don't confuse this with short-term capital gains and short-term long-term capital gains, because that short-term in that case is a year or less. But anyway, so your holding period, you're doing things on a very rapid basis within a month, about 31 days. Okay, second one, Pape versus Commissioner. In this case, your trading occurs 75 to 80% of the trading days per year. Now that works out, the math works out to about 700 trades per year and about 500 hours trading activity. So you have to actually be fully engaged in this thing. You can't be taking major time off. And so you can't trade half the year, or you can't trade 2 days out of the week and take the rest of the week off. You've got to be doing 75 to 80% of the trading days per year. Now, the hours here to qualify for this, it says 500 hours trading activity. That's generally about 4 to 6 hours a day. That does not mean you have to just be trading 4 to 6 hours a day. You can be doing analysis and research for those 6 hours. Certainly anything, if it's related to trading, you can certainly count that. And then finally, the K versus Commissioner is the intent is to make a living, either solely as a trader or supplementary to other income. So this is coming from K versus Commissioner, who said basically, if your intent is to be full-time trader and that's how you're going to make your great, then that's one of the qualifications here. You can supplement your income, although the IRS may have issues if you already got a W-2 going on and you're reporting trading income and expenses, then they kind of question things. They don't like people having more than one job. I realize it's ridiculous, but that is the way it is. So how do I prove these things? Well, if you're interested in doing trader tax status and deducting expenses on your tax return, then one of the best ways of proving this is that your 1099 from your broker and also your monthly statements, because those monthly statements as well as the 1099 are going to show that you're holding securities, whether it's stocks or options, for less than 31 days. You can show when it was bought and when it was sold. So your holding period is shown on there by default. It all, you're trading 75 to 80% of the days because the dates when you were making the trades are on the forms that you're getting, these statements that you're getting. So that is proof there. Now, your broker statements aren't going to show that your intent is to make a living, but you can pretty much, show that maybe you're supporting somehow supporting your family, or you're making somewhat of a living or supporting your income through that. Now, another method for doing this is a lot of people who are doing trader tax status on their individual return, they keep a log of what they're doing every day. And so they can, as far as what their activities are. And then you can also show if you're running this like a business and you have a separate business account, then you can show how you're paying yourself out of that business to actually support yourself and as supplemental support. So those are the court cases summaries. Now, you have to meet those qualifications in order to be able to deduct those expenses on your tax return. And that is the only way as an individual that you can actually increase that cash flow, is by taking trader tax status. If you don't meet these qualifications, then you're not going to be able to deduct this. No, it just won't work. All right. Now, keeping with our theme here of saving money, watching our cash flow, making sure that we're keeping the cash from leaving the business. Trader tax status is certainly one of them, but the question is, are there additional ways to increase cash flow? And basically you can form a trading business, usually an LLC, where all the trading income and expenses can be reported. Now, hear me out on this, because some of you may already be jumping ahead and saying, hey, wait a minute, to form an LLC, you got to pay money. There might be a tax return. There's extra money there. That's cash outflow. Well, there's several reasons for doing this, and they're not all, we call them opportunity costs. That you don't actually pay for it or actually see the revenue because you can't really quantitate, you can't really get a handle on it, but it's there. So for example, when there's a fee for while there's a fee for an LLC, which is a decrease in cash flow, the IRS is less likely to scrutinize a legitimately formed business where trader tax status is not as big of an issue. So for example, you form an LLC, there's several things that happen when you form an LLC. Sure, you got the outgo for cash, but one, you get to take all that stuff, that trading income and certainly the expenses, and get them off your personal tax return. Because personal tax returns are very audited by the IRS. They're very much analyzed by the IRS to see what things are out of whack. And it's all computerized, and the computer looks at what you've been doing all these years, as well as other people that are similar to you, and it denotes things that are a little bit strange going on your return. So you get out of that scrutiny by going to a LLC. Additionally, the cost of IRS scrutiny can far exceed the cost of maintaining an LLC. Consider it basically insurance. Now, what do I mean by that? If the IRS comes in and were to audit you, whether it's a partial audit, I call a partial audit, where they're just looking at a few things on your tax return, or a full audit where they're looking at everything on your tax return, the amount you pay for an LLC each year can really offset anything that the IRS would put you through. Now, what do you mean? Well, some people, when I talk to them, clients, they say, well, I don't have to worry about IRS scrutiny because I've got everything in order and I'm not doing anything wrong. And so I can handle it. The client blows past this. But then I get them to think for a second. I said, okay, fine. When you sit down for 3 or 4 hours with the IRS agent, what are you losing as a result of that? Well, they say, well, I'm not trading. And then they start to think about what the time involved is for actually having to deal with the IRS. You can be perfectly innocent, have nothing wrong with your tax returns going all the way back from the first day you ever filed a tax return. But the fact that you have to sit down with them and you have to prove things takes time. And we all know time is money. And so there's a time component here you lose. And when you're dealing with the IRS, that's time you could be trading. It could be time doing research, or shoot, it's time you could be spending with your family or something else. Or using time up, which is very valuable. Now, let me also tell you another benefit of an LLC that comes into play here. And I'll talk about this a little bit later as well. When you form an LLC, particular types of LLC, you don't have to worry about trader tax status anymore. Remember those qualifications about having to trade 75 to 80% of the days of the year, and you got to have 700 trades, spend 4 to 6 hours a day trading. You don't have to keep track of that anymore if you are LLC. Now, keep in mind, I'm talking about a multi-member LLC. So I want to clarify this here in a little bit. So you get away from trader tax status. So the cost of getting an LLC may actually be getting you to, you can relax on the record keeping, and you don't have to do the record keeping. So there's a time factor there that you're saving. And you can take more time off. If you want to trade 2 days a week, or you want to trade maybe 2 hours a day and take the rest of the day off, you can do that in an LLC. So there's additional ways to increase that cash flow and save on your taxes, basically by forming an LLC. Now, the question here is, what type of LLC? And this is very important that we pay attention to this. There's many ways an LLC can be formed in a state. Now, not all states do this. Some say it's just a regular LLC and that's it. But a lot of states have a single member or a multiple member LLC. And the fee is generally the same depending on the state. Now, some states you can set up an LLC for as much as little as $125. California, it's $800, and that fee has to be paid every year. Some states, the renewal fee is $25. I think I was looking at New York yesterday, and they're $5 a year. It's not bad. But California, again, is $800 a year. So you have to check that out in your state. It's a lot, can be a lot of money. Usually it's not that much. So you have single member LLCs and a multiple member LLC. Now let me talk about those because there is a huge difference here. A single member LLC is basically a sole proprietor that generally taxed on your Schedule C of your personal return. In other words, it's like it's a small business. It's your personal business, like many of you are doing right now. You're investing as a business, and so this is you can form that single member LLC, and it just ends up on your personal return as a personal business. Now, frankly, single member LLC doesn't do a whole lot for you because it ends right back up on your personal tax return. But you can elect to be taxed as an S corporation or a C corporation. So if you form a single member LLC or have one already, you can elect with the IRS to be taxed as an S corporation or a C corporation and get this stuff off your personal tax return. And you get out of the way of IRS, a little bit of IRS scrutiny as a result of it. A multiple member LLC is generally taxed as a partnership, but it can also elect to be taxed as a S corporation or a C corporation. Now, the reason I bring up LLCs as a route here is because you can change how it's going to be taxed really each year if you wanted to. I wouldn't advise it, but you can change how it's going to be taxed. There's that flexibility. You could elect to be taxed as an S corporation next year, and the year following you could be taxed as a C corporation, and then you could go back to being taxed as a multi-member partnership. There's a lot of things you can fluctuate and all that stuff. So that's why we recommend LLCs. If you form an S corporation or a C corporation right off the bat, you're stuck with those. So that's generally why we recommend people go through the LLC route, because there is so much flexibility. Now, this point right here, the #1 most audited business is a single member LLC or Schedule C. If you are planning to utilize trader tax status on your personal tax return and deduct those expenses on your return, eventually you will be audited. It's like playing craps in a casino. Eventually Snake Eyes is going to come up, because people have abused for decades the Schedule C, where you're going to deduct your expenses. People have written off stuff they shouldn't be writing off. They've tried to reduce their tax load by doing whatever the Schedule C. So it is the #1 most targeted thing by the IRS. So what we don't recommend is we do not recommend a single member LLC or just a business. Now, for last year, if you've gone ahead and done this and you want to get those expenses, go ahead and do it. I wouldn't say, don't do it. Get by maybe with a year or two. But once you keep going year after doing this, eventually you're probably going to run into the audit. So we don't recommend single member LLCs or Schedule Cs. Now, that leaves S Corps and C Corps. S Corps and C Corps require the officers to be paid a salary, increasing your taxes and decreasing your cash flow. So you usually set up a salary with payroll deductions. You got to pay FICA, you got to pay unemployment insurance, and there's withholding, and there's a lot to do. Now, some people, this is beneficial, and they want, so you'd have to hire a payroll service to actually do all that. So what type of LLC or business structure does Traders Accounting recommend? Generally speaking, depending on the situation, we usually recommend forming a multi-member LLC to be taxed as a partnership. Now, why that? Well, one, it's easy to be set up. LLCs are simple to set up. A partnership is the basic form. And what I tell my clients a lot of times is start off simple. Start off as a partnership. Let's get your trading stuff going, form that basis. And then once you've got your trading going and everything, then we can talk about other things that you have because your situations change. And so we want to make sure that we start off on a good basis. Now you say, wait a second, I don't have a partner. I don't have anybody else. Well, there's lots of things that can be done. You can actually, we can form a trust, family trust. As you're a 1% partner, you get 99%. We can, if you've got a spouse, you could use a spouse. They don't have to trade. That's your other partner. If you have a parent, they could be a 1% partner and you have 99% of it. There's ways to do it. The worst case scenario, you could set up a single member LLC and the multi-member LLC, and then the single member LLC can be a partner and you can be a partner. There's ways to get it done, but it gets everything off your personal tax return and it sets it up so you don't have to pull salary out. You don't have all those payroll requirements going on. And so now you've got a trading business when you set this multi-member LLC up where your expenses can be automatically deducted. And remember we talked about trader tax status? Well, you don't have to worry about trader tax status if you set up an LLC or frankly for an S Corp or a C Corp. And the Schedule C is eliminated from your tax return risk. Remember I mentioned the time that's involved in audits. We don't want that time to being wasted. And so by forming this standalone entity, if you will, this individual entity that's off your tax return, you save a tremendous amount of time if you were ever audited. And then what partners still claim their share of income on their personal returns. The partnership itself does not pay income taxes. It just files an informational return with the IRS that shows how much each of the partners are going to claim on their personal returns. And then the partners claim that on their personal returns as a share of legitimate business. And that does not go on to Schedule C. It goes on to a Schedule E as if it's an investment business. So it looks much cleaner. The IRS doesn't target it as much, and you can eliminate that, not eliminate your audit risk, but you can reduce it significantly. Okay, now we've talked about what type of entity. Now, remember, LLCs, multi-member LLCs are not for, and by the way, partners can still claim a home office deduction on their personal tax return, which also increases your cash flow. Let's go back to that cash flow thing again. Remember, all of this is to save time, to make sure that things are done in the most efficient way possible, because businesses run well when they're efficient. All right. I've been talking a lot and I need to probably a little bit faster here. So let's go on to the next thing that can save you guys some cash flow. It's the mark-to-market election. Now, trader tax status was a way to deduct expenses off your personal tax return. You don't need it in an LLC or a S corporation or C corporation because they're already entities. The mark-to-market election, it's an accounting method that basically values gains and losses in your account change on account value. Here's how it works. We take the value of your account at the beginning of the year, the value of your account at the end of the year. If it's a gain, then that's what's reported. If it's a loss, that's what's reported. We don't have to look at individual transactions anymore. At the value of the portfolio. Now, again, that's after you take account for cash infusions or distributions out of it. The portfolio, how did that change during the year? All gains and losses become ordinary gains and losses on your tax returns. They're no longer capital gains or losses. Now, what does that mean? Well, let me explain. Capital gains and losses cannot be used to offset personal income like W-2 income or retirement, like that, but ordinary losses can. And so that is one of the primary differences, and it does a couple other things for you. First of all, have a net loss per year. This is some protection on the downside. As an individual investor, if I'm investing, like right now, I'm looking at my portfolio for last year, and I add up all my gains and all my losses, and I've got a net loss, let's say of $10,000. As an individual investor, I can only write off $3,000 of that this year. And then I have to carry the rest forward to next year. And if I don't have any more, then I can write off $3,000 again and carry the rest. So it keeps on going forward. However, with the mark-to-market election, and this is where the ordinary gain and loss thing comes in, you don't have that $3,000 limit in the year. So if I have mark-to-market election and I lose $10,000, I get to write off all $10,000 of that this year. Now, how is that a cash flow increase? Well, I've already lost the $10,000. I can't get that back. I might as well get something for it. So I get the tax return money now, so I can put that back in investment and maybe get some of it back. Whereas I'd only get $3,000 back with capital losses, and I'd have to carry that forward and I wouldn't get it back right away. So that's one of the benefits of mark-to-market election, but is a huge one. The trading account is no longer subject to wash sales. Those of you who are familiar with wash sales, you already know where I'm going with this. But a wash sale, basically the IRS says, if you are rapidly trading within a month on certain securities and you take a loss, you sell something at a loss to get back into a better position and write it up, that loss is what's called a wash sale, and you cannot deduct it, which means those wash sales have to be added back in. Some of you should be getting your 1099-Bs really soon, and start looking at it. See how much you have in wash sales. I had a guy last year did his tax return. He actually had a $20,000 loss in his account. He actually lost $20,000. When it was all said and done, though, he had $50,000 in wash sales. We had to add those back. And so he ended up paying taxes on $30,000 he never really had because of the wash sale rule. With mark-to-market election, you do not have to worry about those wash sales anymore, and that will decrease your taxes right there. Very important concept. Now, this election is best for those trading stocks and options. Now, based on what I've seen, you guys are looking at options, and so that's great. This would be perfect for you unless you're dealing with options on futures. That's a whole different story. We won't get into that right now. Or some options on ETFs, but we won't talk about that right at the moment. But mostly if you're trading stocks and options on those stocks and most ETFs, and you start accumulating wash sales, then the mark-to-market election is good for you. All right. Disclaimer first, the paths recommended here are general recommendations and may not fit your particular situation. This is why I have to talk to you. There is no one size fits all for everyone. We have to talk to you about your particular situation. like I said, we recommend generally forming a multi-member LLC and getting the trading set up first, letting that run maybe of a year or 9 months, getting that foundation established, and then building on it. We may want to convert to an S Corp. We might want to convert to a C Corp. There are some people we have to go straight to a C Corp on, and there's conditions there. There are some people that we go straight to an S Corp because of certain things that they need in their lives. There are certain people that we just say, no, keep it on your individual return. Don't worry about the expenses. Just keep going the way you're going. There is no perfect plan for everybody. And frankly, we can find a perfect plan for you, but it may only last a year. You all know that tax laws change, the economy changes, your personal needs change, the environment changes, everything changes around you. So I advise my clients, I say, okay, let's set this up this way based on what you've told me, and let's review it in a year so that we can actually get something that's working based upon current requirements, not something that was done 5 years ago. We want to make sure that things are going extremely well and fit for the current environment. All right, a little bit about traders accounting, and then we'll open it up to questions here in a little bit. First of all, accounting provides entity creation and maintenance. We can set up the LLCs for you. We can set up the trusts. If you need that second partner, we can set up a family trust if you like. We can set up a corporation, or we can set up a C corporation right off the bat. But generally, it's best to go through the LLC route first. We also do bookkeeping for trading businesses, whether you have mark to market or not. Our bookkeeper will keep track of all the information, your gains and your losses, as well as your expenses. She'll help get you all the expenses before maybe LLC creation, and then she keeps that up throughout the year, and then it becomes very, very easy to do your tax return at the end of the year. And of course, we do preparation for all types of returns. We can do it. And finally, we do tax and entity consulting. So we do sit down and we'll talk to you and find out your best plan. Now, something good here. Free. Raven Johnson is our entity formation specialist. She is the one that sets up the LLCs. She will provide a free 30-minute consultation to find your best options. Like I said, there is no one size fits all for everybody. And so you'll need to contact us and talk to her. Spend that 30 minutes talking to her to find the best way to structure your business. You can give us a call at 1-800-938-9513, or take that link there, and I think Rick's got that link and is going to put that into the chat. I tried a few minutes ago and I couldn't, but I think I probably screwed it up. So this is where I want to bring Rick into it, back in, and we want to answer any questions that you might have. You can put your questions into the chat, and Rick can read those off to me, and we can take questions for a few minutes.
Yeah, awesome, man. I don't have that link handy. If you want to email it to me, I can drop it in there, or just shoot it to me. Deb, do you have to set up your LLC in the state you live in?
Great question. Let me actually bounce out of this. What you need to do for an LLC is, generally speaking, yes, you need to set up the LLC in the state that you're living in. The reason for that, for example, I'm actually in North Carolina. I don't, Traders Accounting is in North Carolina. We work remotely. If I set up an LLC, let's say Indiana, I could certainly do that as long as I've got an address there. But if North Carolina finds out that I'm running that LLC from North Carolina, then they're going to require me to file as a foreign entity. And so now I've got 2 different states that I've got to actually to work with and pay fees for. So it gets to be a little bit cumbersome there. So that you end up having to duplicate everything. So again, with cash flow, you only want to operate in one state.
Okay, that makes sense. Does tax status have to be declared by a certain time of the year, i.e. April 15th for 2022?
Great question again. Okay, good. Trader tax status is not something that you declare. It's just something that you take on your tax return. And so you need the proof there. So if you ever do, when you do use it, you need to be able to back it up if the IRS ever comes back and audits you. But that would be the only case.
That makes sense. Kid, if I start an LLC this year, can I deduct the trading costs, specifically TGO Top Gun Options membership costs from last year, December 2021, since we are preparing 2021 tax returns?
Absolutely. Matter of fact, it's one of the things that we work with you on, is because all the expenses up to you setting up an LLC, those are considered startup expenses. And so we try to accumulate those and bring those into the LLC to make sure that they get deducted properly.
Oh, that's awesome. That's a great catch. Wow, that's a nugget right there. Janet, can you change accounting method from year to year?
You can, but it's not advisable. And I'm assuming you're talking about mark-to-market election.
Yeah.
One of the things that can happen if you change accounting method, just the general response to that, the IRS will get a little bit irritated at you changing back and forth because they just don't like the change, period. The other thing is with mark-to-market, you have to plan a year in advance. So for example, if you want to, and I forgot to mention this in the presentation, if you mark-to-market, then what's going to happen is you have to plan for that. You can't go back to 2021 and do mark-to-market now. You could do trader tax status, but you cannot elect mark-to-market for 2021. You can do it for 2022 right now, as long as you do it by April 15th for yourself. Once April 15th is gone, forget it for 2022.
Okay.
So you have to do it by April 15th for this year. And then you get into next year, early part of 2023. If you want to go back, theoretically, yeah, you can revoke that election and go back. But you have to you still got 3/4 of the year ahead of you. How do you know what's going to happen?
True. Goose, how is mark-to-market declared?
Mark-to-market is declared by making an election with your tax return, generally speaking. If you do not do it if you don't file your tax return by April 15th, you do have to put it with the extension by April 15th, but it does have to be done by April 15th. And the language is in publication 550 of the IRS publication.
Okay, that makes sense. Todd, follow up to that. Todd's asking, is crypto included in mark-to-market?
It can be. Now, crypto limited benefits. If you declare mark-to-market on your crypto, you can get away from the $3,000 loss limitation in a year. But since crypto does not have wash sale, you don't have any benefit on that upside.
Ooh, that's a good one. William, what is the minimum amount of trader expenses deductible?
There is no minimum.
Okay.
There's no maximum either.
Good point. Charles, the LLC that's taxed as a partnership, why Schedule E and not K1?
Well, the partnership, when it does its return, it does put in a K1. That's the way it comes off of the partnership return. And then your K1 is reported on your tax return, and then the numbers from the K1 flow through to the Schedule E. That might be a little bit more technical than what we wanted, but that's the way it works.
Pam, do I have to change brokerage account to LLC, or can I keep it in my name if I am a partner?
If you do it, whatever you do under your, let me handle this in a little bit different way. Whatever you do under your personal Social Security number, the way the brokerage accounts, I'm assuming most of you already have, that has to be reported under your Social Security number. So if you start an LLC, you have to set it up with your EIN from the IRS and set up a brand new brokerage account and do the trading from there.
Okay, that makes sense. William, what's the downside of mark-to-market accounting?
Downside to mark-to-market accounting, there's really one. You do not want your long-term positions. I think I got that in there twice, so just kind of ignore that. You don't want long-term positions under mark-to-market accounting. And the reason for that, if you put long-term positions, you lose that beneficial tax rate of 20%. Long-term capital gains are limited to 20% tax rate. You'll never pay more than 20% on your long-term capital gains. But if you put those long-term positions underneath mark-to-market, you could be taxed as high as 37%.
Wow. All right, guys, I just put that link in there so you can start clicking that right now. A couple more because we want to keep on time. Chris, should you set up an LLC if a majority of trading is out of an IRA? However, I have one cash account but has not made money to this point.
Okay. You want to keep your IRAs inside of personally. You don't want to move those into, because those are personal accounts, and I don't know that you can put them in there.
Good point.
Because your IRAs aren't subject to wash sales, they're not subject to anything, and they're not going to get taxed until you actually start pulling the money out.
Okay, that's a good one. Mike, in the event of a death, the partner has sole ownership. What happens if you're the sole owner?
That's a good question. There's several things that can happen, and we've actually encountered this here in the last year or so. One of two things happen. If you've got, let's say, two partners and one of them passes away, if the other partner does not want to continue with the LLC, then they close it down. We're actually working with somebody on that right now. If the other partner does want to continue on with trading, then there's several options. We can find another partner. We could set up a family trust. I mean, there's all kinds of ways of doing that. If they're adamant, we can actually take it and convert it to a subchapter S corporation where they could continue trading as a single person under the S corporation, but they'd have to set up a salary. And that's why we have to talk to the person, because it depends upon the person's needs.
True. Yeah. It's better to just get that consultation. So Goose and Jeff together, I want to read this. Trading as an LLC does incur higher costs for data feeds at nearly all brokers because now you're trading as a professional. Remember, folks, there's that box, like as you're opening a brokerage account, it's like, hey, are you just a lowly retail trader or are you a pro? Because as Goose just pointed out, most brokers charge you for quotes if you trade out of an LLC for level 2, I think. Does that sound familiar?
Yes, it does, actually. And one thing that we recommend, and one thing you can do is you can not only trade out of a business account, you can keep your personal accounts as well. So not that this is a recommendation or anything, but you can get your quotes out of your personal account and then trade out of your business.
You beat me, man. When I built Options House was really, really low cost, but had crap for tools. So I'd set up all my trades over in Trade Monster and then fire them through Options House. We're not telling you to do that. That's kind of what Wiz did. So I'll leave it at that. Let's see, Kathy, Eli. So if you set up your LLC in March, what happens to trades executed in January and February?
Well, assuming your trades in January and February would still be under your Social Security number. So you would get a 1099-B for your personal accounts from January through February, and then you get a 1099 for your business accounts after that.
Okay, that makes sense. All right, a couple more. Joe, I have an LLC that I used for rental house activity in the past. Can I use this LLC or do I need to set up a new one?
You can use the LLC if your operating agreement says you can. Depends on what the operating agreement says. We write our operating agreements so that you have full flexibility to use the IRA however you want. Mm-hmm. Just one quick note is be very careful about putting things like rental property and your trading assets in the same LLC. True. Because if a renter sues you, they not only have access to the property, they've got to all your investment.
Oh, that's that wouldn't be good. All right, a couple more. Mark, should I do one in Delaware? I live in California, but can I set it up anywhere I want to?
Yeah, you can set it up anywhere you want to in Delaware, but if California finds out that you're trading inside of California, then they're going to come back with a vengeance and require you to register as a foreign entity.
Ooh. Important safety tip, especially in the Republic of California.
They are vicious.
If I already have a business under a California C Corp, should I set up my trading as another business under that C Corp?
you can, if the C Corp is not doing anything, you can certainly do that. We don't recommend C Corps very often, and one of the reasons is even though you've got a flat 21% tax rate, which sounds great, you lose a lot of the benefits. You don't get a long-term capital gains deduction there, or maximum rate. You also, there's an extra tax with the C Corp that most people aren't aware of, that once your accumulated earnings gets over $250,000, there's a second tax that creeps in of an additional 20%.
Okay. All right, couple more. Jim, had an emergency. Hopefully you're okay. Just got on. This has been recorded. Where to? Everything's recorded here for Full Throttle. Here's the link. As soon as I render this video, I don't know, it's going to take 20, 30 minutes to render the replay. I will post it on this page, and the link is in the chat box, along with the link to get your free 30-minute consultation. Mark, I think I'll move to Nevada. Good deal. I live in the shitty Eric, I live in the shitty state of California. Is there any way to improve tax benefits, or do I just need to move?
Move.
Yeah, exactly. I live in the great state of Florida, baby.
There you go.
Eric, I think you got your answer, man. Well, didn't U-Haul run out of U-Hauls recently of people moving from California? Yeah. Kathy, excellent presentation, very valuable information. And can we get a copy of the slides? That's up to Jerry, or and probably part of your consultation. They'll give you some information. Jerry, what's that look like going forward? We want to talk to you guys.
Certainly give us a call. We can get some information to you. As far as the slides, you've already got the video here that you could probably cut some of that off the video if you wanted to.
Correct.
And watch it. Our slide presentation changes based on facts, and I don't on the way things are going. So I don't want the presentation getting out there and then things change. All of a sudden I got old information.
No, that's a good idea. Yeah, the video should stand for itself. All right, man. Other than that, there's like just 100 great presentation, great info. Thank you. Awesome. All right, guys. So there's your link right here. Everybody give a virtual golf clap to Jerry and the folks over at Traders Accounting. This is a great way to end our quarterly Full Throttle training. So even if you didn't grab your a Full Throttle slot, hopefully they can help you out in forming your business. You're welcome. A lot of thanks in the chat box there, Jerry. So virtual clap. We'll see you hopefully next quarter, Jerry, and hopefully the phone.
Sounds great. Thank you all. I greatly appreciate it.
All right, guys. All right, everybody say thanks to Jerry. We're done, man. Full Throttle is essentially over with. We are closing the curtains. I've been sitting here. There's about five just now. So I think we have about 4 or 5 Full Throttle slots remaining. So I'm excited, man. We're going to close the doors, get airborne next week. And, man, what a great week. What did I tell you this week? I said, man, oversold, overbought, come back down. And we're coming back down. So all of our hedges are looking – our treads, right? That tread we put on the other day is looking fantastic, and I'm really excited. Amazon, man, look at Amazon. What an implosion! How many? So I told you this week. What did I say? I'm like I didn't say sometime or whatever. I said every time. Every time I've seen Amazon run up into earnings, it gets destroyed. So either earnings leaked or they're just doing a Facebook sympathy implosion. So I'm glad I got out of my short shares this morning and covered that. So we're good. Full Throttle in the books. About 4 slots left. Otherwise, maybe we'll see you. Oh, write this down. February 18th. Bart and I just did this. February 18th. Tomorrow, Bart and I are meeting with the Max Afterburner folks, the kind of red team, Tomcat charts, what it's going to look like. The dude's brilliant, man. Wait till you see this charting service he's putting together. So February 18th, we're gonna launch it. So even if you didn't get on board for Full Throttle, maybe you can come take a look at Tomcat charts, or like I said, go use the gateway drug that we call it here at Top Gun Options, which is Solo Amazon. For only $97, man, you can get airborne with Solo Amazon and see if this is really a place you want to be. All right, guys, I'll post a replay here in about 30 minutes, man. Have a great rest of your day. Happy hunting. Make sure you hedge, and God bless. Namaste, and I'll see many of you next week in our Full Throttle. Fights on.